Dallas News Radio 600 Kogo. Welcome to your weekend. I'm Sully. San Diego Business Weekend is on the air. So excited to have you. Christina Gustin joining us. Patrick Dehaan from GasBuddy. The inimitable Lucia, money man of some note here in San Diego. Can't wait to talk to him. And Barry Coffing in the business of music. San Diego Business Weekend is on the air. All right, so wow. So I put this chart up again at Kogo.com, keyword Sully, and the chart now has been updated to include this week because yesterday marked 11 years since the bottom hit in the Dow during what we call the Great Correction. All right? And if you want to take a look at the chart, it's easy. Go to Kogo.com, keyword Sully. And the reason I'm going to tell you is because you can watch this show as well as you can listen to it. You can watch it actually online on the website because we shoot it for television. But Dow Jones was at 6,486 back then. And looking back, you sort of say to yourself, man, I wish I would have stayed in the stock market, because 20,000 points later, through all of this falterall we've seen in the last couple of weeks, you got to say to yourself, if the Dow was a bargain at 6,486, then thinking 10 years ahead, it's going to be considered a bargain at 26,000 and change. So I've represented on this chart that you can't see when you're listening to me on TV, but I represented a couple of points on the chart that are notable. One of them is the SARS epidemic in 2013. The other two I've pointed out are the H1N1 virus that occurred, and then Ebola, and then the presidential election cycle. And guess what happened on every case? In every case, we recovered. Every time. Now, I'm not suggesting that this is going to be a V-shaped recovery where perhaps like in the end of 2019, we dropped down for the last couple of months horribly, and then we spiked right back up in January. I can't say that's going to happen. I can't say that this isn't going to be painful. I can't say that the coronavirus isn't going to get worse. I can't say that there's not going to be manufacturing supply problems, because there is. China is the biggest economy in the world, represents 50% of all economies, the biggest manufacturer, the biggest exporter, and guess what? We buy stuff from China. So if there's no Apple iPhones to sell you, then Apple's going to give you a profit warning. If you can't spend money because the stuff isn't there, the GDP is going to take a hit. So look, I'm not painting a rosy picture here. I'm just saying history says that markets will come back every single time. And I'm going to talk to Lucia about this later, about the retirement side of things, because many of you are getting ready to retire right now. Oh my gosh, I lost. Well, just because you're retiring doesn't mean you take all your money out, put it on the kitchen table, and stare at it. It's still working for you. So a number of things happening on that front. I also want to talk a little bit about the fact that U.S. lawmakers passed an $8 billion emergency spending package to combat the coronavirus. That's not the real news, though. The real news is when the IMF, the International Monetary Fund, announced a $50 billion lending program to help businesses harmed worldwide by the epidemic. Could there be a bailout afoot for U.S. businesses if this thing gets any uglier? Very possible, because remember, small business, anything 25 million and under, is the biggest taxpayer in this country, the biggest employer in this country, and oftentimes the least incentivized. So I think we're going to hear that a little bit. U.S. jobless claims dipped at the end of February. No signs so far of layoffs tied to the coronavirus. Private sector employment went to 183,000 in February. Wall Street was expecting 170,000. Large businesses did well in February, adding 133,000 jobs. Small businesses added 24,000. Medium businesses added 26,000. We're still hiring. Fed cuts. The Fed did a benchmark rate cut of a half a point, 50 basis points, in a very rare intermeeting move to combat the coronavirus. And the market did a head fake for a minute. Market went up for about 1%, and then immediately turned around. I think the reason is because the timing, the way it was done, which was completely odd. And then I think investors said to themselves, what does the Fed know that we don't know? That's very scary. So I think that's part of it. And speaking of the Fed, when that happened in a press conference, Fed Chair Jerome Powell, turned a lot of heads in his discussion of the state of the U.S. economy. He basically said the economy is strong and that it would get to the other side of the coronavirus slowdown. So he was very, very purposeful about that. He was intentional about that statement. He said, and I quote, "I fully expect the U.S. economy will return to solid growth and a solid labor market as well." Well, if you look at the economic data that was released this week, it shows you just how solid everything is. I just told you about the ADP payrolls, right? The Institute for Supply, the ISM, Institute for Supply Management, their report on service sector shows a 57.3, its highest level in a year. And I will tell you, the first question that you have to be asking is, what about that manufacturing supply chain problem that we just talked about? Well, he says, and this is Jerome Powell, that economic growth was gathering so much momentum before the coronavirus outbreak that he believes a restart post-coronavirus outbreak is going to be very quick. And he's not the first person to say that. A lot of economic analysts have said if there's going to be a recession, it's going to be sort of meh, because A, we're sort of expecting it, and B, we had some really good momentum going forward. Here to talk about that and more, the smartest person I know in money is named Christina Gustin, UBS Financial, RKG Wealth Management. She joins us here every weekend. Christina, thanks for taking the time out today.
Thanks for having me. Wild week on Wall Street.
Yeah, how was your phone? Do you have your clients trained by now not to call you during times like this? Or is
they were remarkably calm this week. I'm very proud, actually, of how calm everyone was. I actually had one of my favorite 91-year-old women clients call me and ask me what she should be buying.
Wow.
So I really admired her intestinal fortitude to ask me that question. But yeah, it was a really wild week, and everything you said is correct about the virus situation, and let's not forget about Super Tuesday, election day, which was followed by Super Wednesday in the stock market. We saw a huge spike up on Wednesday, and followed by another giant downturn. I just think the volatility is unprecedented. I think it's really interesting what's going on right now.
Well, what's you mentioned Super Tuesday, so let's face it, we had a great Wednesday, and many analysts, there was a chorus of analysts that said if Bernie Sanders looks like he's going to win the ticket, the market's going to roil a little bit. And I think the opposite happened when Joe Biden had such a great night on Tuesday, because obviously Bernie Sanders has a couple of philosophies, ending the export of coal, ending the export of oil, ending the export of natural gas, a wealth tax that probably doesn't sit well with many Wall Street types. Then again, Joe Biden being more moderate still is not historically speaking, what you'd call an economic boon. So what do you suppose caused the uptick, the big uptick, or is it just plain old volatility?
I think it's both. I mean, I think it's absolutely volatility, and because we've been, approaching oversold. I mean, we're certainly in correction territory right now from where we were earlier this year. But I think, that was a very clear statement by the market on Wednesday that it was like a relief that Bernie Sanders no longer appeared to be gaining traction towards the nomination.
Isn't that funny how Wall Street reacted to that? I was just so interested that people actually pay attention to that. They're if there was ever a lesson to be learned about how the market takes things into consideration in advance, that was one of them, right?
Oh, absolutely. Absolutely. No, it was very, very evident. Unfortunately, the upturn was very short-lived. I think, this is our news cycle now. It's 24 hours, and everyone's back to the coronavirus. What's interesting this week is that it's all been very vague, and this is still very much a developing story. But this week we're starting to see at the same time, while numbers are decreasing and the situation is improving in China where it started, they're getting worse in other places. You saw California declare a state of emergency this week, which doesn't mean that people are dropping dead in the streets. It just means that they're trying to access additional funding and resources. But you're actually having industries and individual companies come out now with attempts to quantify what they predict the damage to their earnings and profitability will be this year. So I think as those numbers start to pour out, my expectation is certainly that that's going to be hard on the markets, at least for the next month.
Well, and you bring up a great point, because all of those companies that reported earnings, Christina, for the last couple of weeks did not take into consideration the coronavirus because they didn't know what was going to happen. So I think profit warning, you saw Boeing take a hit this week. I mean, you're going to see profit warnings come out. I sort of feel, though, right now what's going on, because if you go back 2 years and you look at this market, you're going to see a chart that shows support and resistance right at this level on the Dow going back to roughly October of 2018. And if you draw a line straight across from where we were October 2018, which I'm going to call 26,200-ish, you draw a line straight across. That line hits once again in March of last year, April of last year, June of last year, July of last year, August, September, October, and once again now. This is a support resistance line that you can't deny. And I think a piece of that means that, I think there's some technical things going on here as well. I think we're consolidating here a little bit, and only time will tell. Christina, stay right there. I'm going to keep you just for one more minute because you're too smart to let go. And I by the way, because I didn't even ask her permission. I'm going to keep her for a second. Christina Gustin, UBS Financial, RKG Wealth Management. Also, Barry Coffing is going to join us from Music Supervisor in the Business of Music later in the program. Also, Patrick Dehaan's coming up next. Did I mention I was your... See you in a minute. When it comes to loving, yeah. News Radio 600 Kogo. San Diego Business Weekend. Welcome your weekend. Thanks again to Christina Gustin with UBS Financial. Very excited to have Ray Lucia, famed San Diego and international money man on television and radio. Going to be in studio in just a few minutes to talk about this coronavirus, this market. He's written so many books and so many articles on retirement. He's forgotten more about money talk and about retirement than most of us will ever learn. So anxious to have him in because, look, you're watching fear-based selling the last couple of weeks. We saw, 1,000-point gain on the Dow Jones, this biggest single-point gain in the history of the markets. 5% goes up. Then the following day, huge volatility in the markets with respect to, do you realize that in aftermarket trading, as I mentioned with Christina, we were up 1,000 points in aftermarket trading, and then immediately before the market opened, we were down, we were up, we were down. Then the Fed did the emergency rate cut. Markets went up another 1%, and then finished the day down. And it's just been one of those. It's been one of those markets in the last couple of weeks where, look, the biggest, I guess, the number one question I get email-wise is it time for me to go buy stocks since everything's so cheap? Look, just because something's cheap doesn't mean it's not going to get cheaper, number one. Number two, you shouldn't be thinking in that direction because you shouldn't be day trading unless you're a professional trader. And number three, you need to be thinking in terms of time horizons here. Ray Lucia is going to be talking about that, and I'm so excited to have him here on San Diego Business Weekend coming up. In the meantime, our good friend Patrick Dehaan from gasbuddy.com joining us here. Gasbuddy.com is where you can actually find the cheapest gas prices in the country. Not a sponsor of the program, but a resource for us. And I have to talk, Patrick, because you've seen the markets get roiled by this coronavirus. Obviously, the election is a big concern. Oil goes up to $47 a barrel. How does all of this play out in the world of oil and gas? Because the airline stocks are going to get hit. They're going to have a surplus of fuel and all that. Is that going to help us in the long run? What's your assessment of that?
Well, Sully, we're all watching our 401ks essentially bleed to death in the last week, it seems like. So it's not a whole lot of comfort that gas prices are going down a few cents per gallon. But everything is basically tied together. Oil prices are moving with the stock market. Now, of course, to partially interrupt that relationship, OPEC is now stepping in to mull over whether or not to cut oil production in light of the fact that oil had its weakest week since the Great Recession. About a 21% decline in crude oil prices has OPEC very worried, which means lower gas prices until or unless OPEC steps in to cut production.
Now, obviously, when you see things like the coronavirus scare, just like in SARS, just like Ebola, the hotel stocks, airline stocks are the first to get hit. In fact, if you take a look at who actually got hit in this last week, or the last 2 weeks, I should say, the number one biggest loser was American Airlines Group, stock symbol AAL, down 31.50 in dollar value. Alaska Air also, Royal Caribbean. All of them have top line expenses where labor and fuel are their top two expenses. Does that mean, if they cut supply, does that erase the supply and demand question about oil prices, number one, and number two? Does that make it cheaper eventually for us to go on trips through these carriers?
Well, it would absorb the excess glut that could potentially develop if OPEC doesn't step in to cut production. The reduction in demand could lead to a glut. Since the start of the year, I looked at jet fuel this morning. Gulf Coast jet fuel was $1.90 a gallon. We are now at about $1.43 a gallon. So in light of all the cutbacks, all the long hauls that have been canceled, jet fuel prices are substantially lower than where they started the year. But again, as you mentioned, on the surface, fuel costs are kind of an afterthought. But certainly, airlines the winner, at least when it comes to lower jet fuel prices. But as we've all seen from such scares like this, Americans stay home, so it really doesn't matter how low the flight is priced. Americans a little bit nervous to get out of the house.
Patrick Dehaan, head of petroleum analysis for gasbuddy.com, a regular guest here on San Diego Business Weekend, as well as on Big Biz Show, our national TV show. Patrick, so what does that mean to the driver in Southern California if we're not buying as much fuel? There are surpluses out there. I'm assuming that gas prices are going to go down in the next couple of months as a result of this, or is this a non-issue? Because as you and I talked about before, potatoes are just a line item expense to McDonald's, and just because the price of potatoes goes down doesn't mean the price of French fries goes down. Oil is a line item expense to a refiner, and just because the price of oil goes down doesn't mean they have to pass it on to us. But is that true for the gas stations? Is that true for the rack, so to speak?
Yeah, they'll be passing it along. Now, California, a little bit of a difference here in that there was a refinery fire last week. I'm sure many people heard about the Marathon refinery fire in Los Angeles. Coronavirus happened basically at the same time and mitigated the increase in price after the fire. Markets obviously sagged last week. But having said that, prices in LA, San Diego are starting to inch lower ever so slowly. Call it them being behind the curve. The drop is a little bit slower in California because of that. But keep in mind now, some of the prices in Southern California at the lowest level in the last year. So still some prices, averages all about mid $3 a gallon, about $3.50 a gallon. But there are starting to see some stations at $2.99 pop up across California. So to answer your question, I don't know if we'll be able to ride the tide into the summer, but we should be able to see lower prices here in the weeks ahead as a result of what we're seeing, unless the situation with coronavirus improves greatly and then oil prices go up, stock market goes up, et cetera.
Hey, Patrick, what happens with election cycles and oil? I have not researched that. Does it matter? Because look, at the stock markets, believe it or not, stock markets typically like a Democratic president, but economies like a Republican president, although this has been the Teflon market, and it's been really a head scratcher recently. Do oil prices get affected by elections? Because let's face it, and I don't want to get political here, nor am I going to make you get political, but Bernie Sanders is causing analysts to get really, Wall Street analysts, to be very concerned. And there's a couple of reasons that are right in your crosshairs. Number one, he's talking about stopping the export of coal, stopping the export of natural gas, and stopping the export of oil. Now, is that going to, let's assume that, whoever the Democratic candidate is against Donald Trump, is that going to affect the markets at all, in your opinion?
I don't think it'll get done. I think that there's just no way that oil exports could be blocked.
Okay.
I think really there's no way that you can take leases back that the federal government has granted for fracking, for offshore oil drilling. So I really, if Bernie Sanders does make to the White House, I really see a very small percentage chance that all of this could happen. Now, if it somehow could, say he got the vote, say he got it through Congress, the White House signs it, then it'd be a far different scenario. And certainly that could have more of an effect. But really, I see slim to no chance of him at least passing these such pieces of legislation into law. The exports, I really don't see that you could do that. Monumental carryover if that does happen. But then, of course, the ban of fracking that some of the candidates on the left have called for as well. I mean, those both could shape the future of energy in the U.S. if they somehow did make it into law.
Let's take a look at a national picture. Guys, pull up the gas price, the gas temperature price map. If you're listening to us here anywhere in Southern California, from San Diego up to Santa Barbara or as far east as Yuma, you can also catch the San Diego Business Weekend right on Kogo.com. We do a television version, so you can see actually Patrick's shiny face here, along with what's going on with respect to on GasBuddy. And GasBuddy is a price temperature map. In other words, the more yellow the state appears. And I find it interesting that they changed the colors from red to green, because I'm sure that was a political move. Now it's purple to yellow. California is most expensive gas by a lot because of the environmental taxes, averaging $3.15 or greater a gallon. I'd love to find $3.15 gas in San Diego. Where's the cheapest price in the country right now for gas, Patrick?
Well, Sully, we're down to about $1.77 in areas of Texas, but
wow.
Believe it or not, 26 states have at least one station under $2 a gallon.
Wow. And right now, gasoline, I don't know if you agree with this, gasoline is like a tax, man. If you think in terms of gas, you don't have a choice in paying it or not, because obviously it gets you to work and such like that. So if gasoline is indeed a tax, that might be a boost for the economy one way or the other. Okay, so last of all, before I let you get out of here today, we've seen the commodity number for oil and gas fluctuate, and not really in concert with the stock market, with the exception of at the beginning, believe it or not, of 2018. Any anticipation on what happens in the global markets? Because we're talking about the price of oil here. You're talking about cutting back on production in all countries, including Canada, Mexico, U.S., and the Middle East. Can we continue producing and affect price if, let's say, the Saudis affect price by cutting back production? Can we mitigate that at all?
Well, I mean, we can, but what the Saudis can't really control is market share, and they're sacrificing market share whenever they cut production now. I mean, the U.S. isn't in the picture. So the U.S. continues to increase oil production slightly, 13.2 million barrels a day. That's up a few million in the last couple of years. So whenever you see OPEC make a move, it's basically them sacrificing market share and giving that away to the U.S. It's certainly a difference from 2014, when the Saudis were basically trying to produce as much as possible to derail the U.S. oil industry. Well, that didn't really work so well. So that's what we're seeing now. I don't really think that you could slow that down, barring a major slowdown with the coronavirus.
I told you this would be last. I have one more question for you. If you go back 2 years and look at the chart of oil was trading at roughly, $65 a barrel 2 years ago. We're now at $47 a barrel. Are we fairly valued now, or you think we're undervalued in the oil and gas markets?
Yeah, I think we're probably a little bit oversold. But having said that, there is real demand destruction happening from the coronavirus. So I think this is where the checks and balances come in. OPEC's going to discuss and probably approve a short-term production cut just to stem the decline in oil price from going further. All
right. Patrick Dehaan, head of petroleum analysis for gasbuddy.com. Thanks, buddy. Appreciate that. So excited. Ray Lucia, legendary money man. Your money, your life. Yeah, he made that up. I've stolen that a number of times. He's coming on the program next. San Diego Business Weekend, News Radio 600 Cover.
I am not going to question why. You never know what until you try.
News Radio 600 Kogo, San Diego Business Weekend is on the air on Sully. You can catch me every morning on San Diego Morning News right here with Ted and LaDonna. Also, Good Morning San Diego at KOSI and the Big Biz Show, nationwide coast to coast with Russ T. Nails. I'm so excited because I have to tell you this story. I was an investment banker not on the retail side. In other words, I didn't represent clients. I represented companies going public and in the venture community back in the early to mid 90s. And I was asked to be a guest on a radio program here in San Diego. I don't even remember the station. And I got a phone call from Cliff Albert, who is still the news director here at News Radio 600 Kogo, asking me if I was under contract, because I was a frequent guest. And the next thing you know, they threw me into radio, and I was this literally a 36, 35-year-old kid who was a pretty successful entrepreneur, thought he knew it all. And they threw me in studio to let me try to do this radio program. And here is this guy who's basically the Pope of talk radio and money in San Diego. And of course, it was Ray Lucia. Now, as history goes, I was next to Ray Lucia on the radio dial for probably 10 years. And it took me 5 for him to actually take me seriously, because I was either bugging him in the hallway, tugging on his shirt, or acting like a jackass on the air, like I still do, which turned out to be a brand for me. And joining me in studio today, Ray Lucia. I've never asked you from your side, what did you think of this punk?
Everything he said is 100% true.
You didn't want anything to do with me, huh?
Oh, no, that's not true at all. I thought you were a pretty funny guy and a talented guy. But, you know, when you first start on the radio, the first day I appeared on radio, and it was even worse the first day I appeared on television.
Right.
I was a nervous Nelly. It was horrible.
I never saw you as that. You were cool. You were smooth as a gravy sandwich.
You know, maybe.
But you had established yourself by the time I got there, and I was, you know, and the problem with when you get into radio and you're not in radio is you try to sound like people on the radio, which is exactly the opposite of what you should do. So welcome, an esteemed career in the money field as well as on radio and television, continues to be an analyst and a pundit and a trusted source. I'd like to have you on a more regular basis, but let's talk about your bailiwick, and that's retirement. And when you look at what's going on in the markets right now, let's go back to when you were answering phones and client calls and such like that. How did you get through times like this? Because this is when fear and greed steps in, and you guys just had to put your blinders on.
Well, I think Warren Buffett said be greedy when others are fearful.
Yeah, right.
Now's a really good time to channel Mr. Buffett, because there's an absolute panic out there. I don't think there's great reason for it, but we've had absolute panics before.
Right.
You can go all the way back to 1933. You can go back to the 1929s. You can go back to the lost decade that ended in 2009, where the stock market did nothing.
Right.
But what's happened since then?
Well, take a look at this chart here. And by the way, I know you're listening to us on the radio, but I say take a look at the chart, because you can go to kogo.com, keyword Sully, and actually watch San Diego Business Weekend. And so I put this chart together a couple of days ago, thanks to our friends at stockcharts.com. And I thought to myself, okay, on March 6th, 2009, which is exactly a year from today, Dow is at 64.96 at the all-time low, all-time high for panic, all-time low for everything else. And now, and this was I put last Friday, I believe, at 26.5. We're still at around the same. Boy, and you go to yourself, man, well, Dow was at 64. That's a bargain. I wish I would have got it. I have to say, if the Dow was a bargain at 64.96 at the peak of fear, isn't it a bargain now, thinking 10 years in advance?
Yeah, it is. Here, you know, there's a couple of researchers that I follow religiously still to this day. Michael Kitces from Pinnacle is a great researcher, very, very smart guy, really smart. And Dr. Wade Pfau, who is the retirement researcher that so many of us have followed for years.
Right.
And they did a research report, I think it goes back all the way to 2013, maybe even before, where they looked at cycles. And what's interesting about the markets, there's very few predictable items, I guess you could say.
Right.
But this has happened on a rolling 15-year basis since the beginning of time. There have been really good 15-year periods, followed by really bad 15-year all inflation adjusted periods.
Sure, right.
So what does that tell you? From a retirement planning standpoint, what it says is this: if you have enough safe money on the day you retire,
right,
and you spend, this sounds a little bit like a bucket strategy.
No, but it's good. You wrote the buckets of money strategy.
But if you spend from the safe money first, while you allow your stock and riskier money to grow, then one of two things are going to happen.
Okay.
You're either going to enter retirement during a dismal period of stocks, which would be absolutely frightening,
Right.
or you're going to enter retirement during a really good period of stocks, followed by a really dismal period,
Right.
which at that point in time, it will be absolutely frightening.
Yes.
But here's what we know. We know that even if you start and the stock market is dismal, 3-4% over the next 15 years, it's usually much more than that, but you have to assume on the day you retire,
It's going to be horrible.
you're going to be unlucky.
Right.
So even if you spent through all of the safe money, one of the worst things you could do at that point would be to sell stock.
Right.
Because you're up against a 15-year period
And you're
of
locking against you're locking your losses in.
13, 14%. So when I look at that chart, I see nothing but opportunity.
Yeah, right, sure. And by the way, Ray Lucia is with us, legendary money man here in Southern California and nationally, TV and radio, wrote the Buckets of Money strategy that many of us follow. What's interesting about that is all you do when you sell at the bottom like that is lock in your losses. The other piece of this, and I think it was you that first told me this, that had you taken your money out on times like this of the stock market, so now, Ray, get me out of the market, and then had you re-enter the market when it felt quote-unquote safe, your returns over the last 10, 15 years would be 6-7% versus 13-14% had you just stayed in. All those people that sold stock this last week, right, that didn't get to experience a 25% increase in Apple, Microsoft, and such, or whatever there was in their 401k. So what do you tell Johnny Lunchbucket, Cindy's CEO right now, that's looking at their 401k evaporate before their very eyes? I tell them, look, it's going to change. Overall, look at that chart. It always does change. It might be painful right now. But what do you tell those folks?
Yeah, you tell them to ignore the noise because right now there's a lot of noise on both sides of the aisle, and it's freaking people out.
Yeah.
But remember, this is a long-term ball game. Even somebody that's 70 years old today still has a life expectancy near 20 years or more.
Yeah.
So there's a certain percentage of their money that has a long enough time horizon. Now, if you're younger, one of the best books I ever read was Beating the Street by Peter Lynch, world famous money manager.
Fidelity Investments.
Yeah, vice chair of Fidelity now. But he ran the Magellan Fund like 28% a year for 14, whatever it was. Just some phenomenal track record.
Sure.
And he actually, in his book, wrote about being in an all-stock allocation, which freaked a lot of people out, including me at the time. His logic, though, was pretty good, except for in black swan markets,
Sure.
like we could be in right now.
Right.
But if you take a little bit of Peter Lynch and a little bit, not to put me in the same category,
but a little bit
Ray
of
Lucia, and you say, well, listen, if you divvied up your money between safe and risky, and you always had enough safe money to get you through the tough times, stocks do double digits historically over a 30-year period. This you'll find interesting. If you looked at 30-year blocks, the stock market does somewhere around 9 to 10%.
Right.
Over 15 years, it could be pretty dismal.
Sure.
3-4%.
Sure.
But then the next 15 years makes it up 13-14%. Where have we been since March of 2009? I plugged in my calculator. I don't know how accurate it is, but it's pretty close. 14% per year compounded from the bottom. Folks, sometimes you miss a day, you miss a lot. So my advice is have enough safe money banked so that if you lose your job, you lose your health, you're forced into retirement, you can draw from the safe accounts because in the long run, the stock market will help you out, bail you out.
Is Buckets of Money strategy still available for people to buy and look at?
Yeah, of course.
You go to bucketsofmoney.com? Is that where
No. I gave up, when I retired, I gave up all of my advisory business and everything.
So people can Google Buckets of Money and still find out.
They can get it through Sully. Just have them email
send an email.
you. And
I'll get to you. So here's my question for times like this. I've always said the market runs on fear and greed, but I don't think people should be looking in terms of getting out today. What should I buy today? Because they shouldn't be looking in terms of day trading. How do you talk them out of that? Like my number one email I get right now is it time to get back in? My first reaction is just because something's cheap doesn't mean it's not going to get cheaper. But number two, you shouldn't be thinking in terms of that.
No, they did a study back in around the 2000 era when day trading was super huge, and they determined that 70% of the people that day traded lost money, and 70% of those lost all their money.
Yeah.
So you can't do it. You're up against professional traders that in milliseconds make millions of dollars on tenths and hundredths of a percent change in the market.
Right.
You can't really compete with that as a retail investor. So don't. Have a
why
strategy.
would you want it, right?
Just what is your strategy? I wrote a book. I haven't published it. It's actually a booklet on financial advisors, because what I find is so many people, especially today with robo-advisors and the internet, people think they can do this job themselves. Well, you know what? I could probably learn how to do dentistry. You sure as heck don't want me to work on your teeth.
Right.
Worse yet, heart surgery or brain surgery. So the book that I wrote talks about how if you team up with a good best practices advisor, they add, and this has been proven out in studies, academic studies, they add 3% after their fees to your bottom line. 3% per year compounded.
That's free money. Ray Lucia, will you come back with us on a regular basis?
I'd love to do it, my friend.
We sure miss you. Ray Lucia.
You know, I didn't think I'd ever say this, but I sure miss you too.
Yeah, okay.
I love you, brother.
I was next to this guy on the radio for so long. He would avoid me in the hallways when I said All right. San Diego Business Weekend continues on News Radio 600 Coast.
Woke up late one Tuesday. I'm looking tired.
News Radio 600 Kogo, welcome to your weekend. San Diego Business Weekend's on the air. It's had Christina Gustin today, Patrick Dehaan, Ray Lucia, and my favorite guest on the planet, Barry Coffing, who runs MusicSupervisor.com, WeGetMusic.com. Fantastic stuff. As well as he's the guy who puts on the events locally called Springboard for the music business, and he knows the business of music better than anybody I know. And of course, since I'm such an enthusiast when it comes to local music, I tapped into Barry a while ago when he did his Springboard right here in Ocean Beach. So if you're listening to us up in LA or out in Yuma, Barry is what's called a music supervisor. He is the guy who has made decisions in what songs go into movies and film, video games, so on and so forth. And he also represents artists and has a platform for artists to put their music up to get exposure in those areas. So joining us now from, I think he's Hollywood or Los Angeles. No, actually he's in Texas. Barry Koff. I like to say Hollywood because I don't think people understand how you're all over the country anyway. I mean, You're in Memphis and Nashville and San Diego and Los Angeles and Dallas. Great to have you along, man. Good to see you.
Oh, great to be here.
So here, let's talk a little bit. About what you do first, and then we'll get into the business of music. You are basically a platform that curates music, and then places into film. This number will blow you away, folks. Barry, how many songs have you put into circulation in movies, TV, film, and et cetera?
Oh man, I don't know. I think we've got different things. We also do sonic branding. So we have 50,000 songs making money over in Europe. Wow. They're playing in French water parks and Swedish eyeglass huts and things like that. And then we pitched over, in the last month, we pitched over 200 film and TV projects.
And right now, and you said there's some sort of, there's a statistic you give that talks about how many songs per day or per week that you're placing. You guys do a lot of business there with Music Supervisor.
Oh yeah, so we're doing. I'll give you my numbers from today, and it basically goes back for the last 30 days.
Okay.
So in the last 30 days, we've pitched 209 projects. We've gotten 26,885 songs heard for projects, and we put a song in a film or TV show every 72 hours.
Wow. So now and I'm going to get a million phone calls and emails about this. So let's be clear. What does that mean? Does that mean you're putting the Rolling Stones, who are coming in concert here in San Diego, on it? Does that mean you're putting Journey, or is that just guys like me and people that are listening that have music have the opportunity to do that just by putting their music up? Correct?
Yeah, it's all independent artists. So yeah, we don't do that for major label. I mean, they have a whole division that'll handle that for major labels. It's when they can't afford the major label, or they want somebody new and hot, or they need a specific type of music that it's difficult to find. That's where we kind of clean up.
And basically, Music Supervisor basically takes folks' music and curates it. So how do you, and you call it the fastest way to license music, how do you connect those dots between, and if you look at and see some of the movies, film, television that you put, I mean, these are all shows that we've seen. I mean, this is not third world television that nobody has heard of. You're putting people in famous stuff like The Blind Side and Burn Notice and Lost, the television show. And
oh yeah, that was fun. And we got something in Green Book that won the Oscar for Best Picture.
In Green Book, the movie.
Year. Wow. Yeah. And so we just did something in Miss Maisel, which I love that show. So we're in season 3 of that.
The Marvelous Mrs. Maisel. I think that's on Prime, Amazon Prime, or is it Netflix? One of the two.
I can't remember.
Yeah,
I think
it's on one of the two, but it is a huge success right now.
Well, Netflix has 200 projects that they're working on in rotation right now. So our guys are getting carpal tunnel pitching.
So talk about streaming revenues and so on and so forth. We get our music. We used to go to the warehouse. We used to go to Tower Records here on Sports Arena Boulevard, Licorice Pizza on Garnett in San Diego. That's where you got our music. And then from there, by the way, we got our records, we got our 8-tracks, we got our cassettes, we got our CDs. That's how it happened. And then suddenly the iPod comes out and music is digital. But yet we still purchased our music online. We went to iTunes Store and we bought single songs, or we bought albums. And those are still available on several platforms, but that's not how music is consumed these days, is it? It's basically streamed, correct?
Yeah, I guess the best way to think is we've gone from I got to own my house to we're apartment dwellers now. Streaming, like the reason I was excited to come on today is we just got the new numbers in, and they broke their big ridiculous mark in the fourth quarter of last year. The major labels are now making $1 million an hour from streaming.
So here's the business model that I want to try to figure out. Number one, streaming services like Spotify, for example.
Yep.
You pay a certain amount of money per month to have that stream. Pandora, for example, Pandora Premium's a few bucks. I mean, they're not a lot of money, but long story short, you're basically paying for the service and then you get the music for free. Do those companies now pay royalty fees to the songs that are being played? Is that how that works?
Yeah, they have to.
And that's the business model, eh?
Yeah, that's the business model. And the more you get played, the more you get paid. Obviously they're not super pro artists. The labels are doing really well, and they kind of rigged the game a little bit in controlling playlists and advertising and things like that. But they have really, streaming's really saved the music business. So we can't hate on it either. It is the future. It's basically streaming and touring. If you're not good at one of those two things, you may not be able to be in the music business. And
is it easier or harder now, Barry, to get into the music business? Because back in the day, you used to have you have to get a record deal, and then you have to have one guy look at you, and there's only a handful of bands. I mean, you look online now, and there's millions and millions of bands. I mean, anything you want, you could get music for. Does that make it more? I would argue because just the sheer amount of traffic would make it more difficult, right?
It's easier you're right. You don't have a gatekeeper keeping you out. But now both Apple Music and Spotify have hit 60 million songs, and they don't really have a search engine. They've got playlists. They
don't have a search engine. That's interesting. No. So you got to know what you're looking for already.
Well, it was one of the most difficult things we did with our companies. We spent $1.4 million building a search engine, because having 16,000 labels from 78 countries around the world, if you can't find the music when you need it, it doesn't do you any good.
Yeah. Oh, so when you're searching for music for a certain project.
Oh, we cheat. We've got a search engine makes everybody else look like a toy.
So that's what WeGetMusic does, correct? Or is it?
Yeah, WeGetMusic is using that. We're actually taking everything we developed and learned over 15 years of doing the professional stuff for Disney, Fox, and Warner Brothers, and we're going to kind of gamify it and make it a lot more fun for fans. And
talk about, I mean, just from where I'm sitting, if I'm looking at WeGetMusic versus, let's say, a Spotify, it's a more attractive platform for an artist as well as a listener, correct? I mean, you're sort of countering a couple of objections at the same time.
Well, it's definitely more beneficial to the artist because it pays more. It's more of a fair ability to be discovered. From a fan, it's a different offering. Like Spotify's thing is every song you already know you love in one place.
Right.
And we're going every song you didn't know you loved in one place. You know,
Right.
we're a discovery platform. So that's, you know, if you just want to go and listen to every Taylor Swift song, by all means, go to any of them. They all have the same music.
Right. And with respect to this, Barry, where's the music business going? Because you hear about AB5, which of course is a subcontractor law. And we've
they just had they had a big decision that shot part of that down already.
Yeah, I mean, but the point is for the music business, are you think music and recording and people getting in, are we on an upswing right now, or are we static right now? Is this a good time to jump into the game?
It's the best time it's been in decades. I mean, Goldman Sachs estimates that it's going to basically going to do more than double. Like the argument now is it going up? Is it going to double or triple? Yeah, exactly. And I think a piece of that is the fact that they've got access to guys like you. I want you to come back. Barry Coffing's his name. The guy's one of the smartest guys I know in the music business, as well as he's created a really interesting platform. MusicSupervisor.com, WeGetMusic.com. He will be a regular guest as our music expert in the business of music here on San Diego Business Weekend. I want to take a couple of minutes before we go today and talk about Measure C and what's next for the San Diego Convention Center. And I know that as a news guy in the morning, I don't really speak my mind much. I just give you the facts and maybe try my best to save you some money and point you in the right direction. But on this show, I want to make a couple things clear here. The apparent defeat of Measure C, and I say apparent, and I'll tell you why in a moment, that would have raised San Diego's hotel tax to bankroll a convention center expansion, meaning that when you go stay in a hotel anywhere, not just here in San Diego, anytime you go visit, you're paying a hotel occupancy tax. It's the heads and beds tax. For our particular purposes here in San Diego, there's three components to our general fund. Number one is property tax. Number two, sales tax. Number three is TOT tax. So it runs our city. There's 350,000 mail votes that haven't been counted. There is a 2017 Supreme Court ruling that suggests that a 2/3 approval requirement for local tax increases might not apply. I don't think this story's over. And keep in mind, this was going to help out $2 billion for homeless initiatives, as well as $650 million for road repairs. I got to tell you, this is something that you got to take a look at and think to yourselves, wouldn't it be great if somebody else could pay for all this stuff? All right. Enough of my soapboxing. I'm Sully. Catch me everywhere. This in the mornings here. San Diego Morning News. Good Morning San Diego over on KUSI. Remember, our new show on KUSI premieres Saturday, 5 p.m. on the air, San Diego. With Sully, Little Tommy, and Rusty Nails. In the meantime, have a great San Diego weekend. News Radio 600 Togo.